The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Monday, the 14th of March. We're looking at the Dow having an initial big pop to the upside, then pulling back a little bit, but now it's up 487 at 40,696. This is going to be very interesting because you really need to see a strong leg B, and that means it has to go over 40,776. That was the high on last Wednesday. This is going to be very important because as we're looking at it, the selling pressure that you would expect on the big pops to the upside and then giving it back. Well, as I see it, that MACD, look, here's the MACD in the daily chart. That's the moving average convergence divergence. And it is, I spoke about it last week. I said the histogram is starting to improve. And usually when that happens, it goes all the way to the point where it's called the 0% line, where it either gets to the 0% line, breaks it, or it deflects lower. As I saw it, there was a chance that we could actually cross positive. It's going to take a long time meaning we're talking about days from the sell-off that began, the biggest sell-off that began at the 42,821 high of the 26th of March, for us to really see some kind of a turn. Well, as it stands right now, the Dow daily 914 is still pink and has a long way to go to be able to cross positive. I'm suspecting that if the MACD, which is -7 right now, can go to a +2 or higher, that 9-period moving average, that's the 9-period differential in the MACD, is going to cross positive. You see the ictus that was made right here. This is the low of the Dow at 36,661, and that was on the 7th of April. It actually missed it. It's very unusual, but it missed it in the on-balance volume by... Oh, no, it didn't. That's right. It's exactly the same. I showed this the other day when I was doing my overview for my subscribers to my opening call. That hit, and it reversed at exactly the same moment that the price made a low. Those are all ingredients that I thought was a benefit to the market, which is the reason why early Friday, we went long. Kind of aggressively long on the Dow. And as that stands right now, we've taken a little bit of profit, very nice profits, but it's very tough. For instance, we had another position that we've done fantastically with, and we've taken quite a bit off, and I wanted to add back. So we added back this morning, and it did almost what I thought it would do, but then it pulled back just a fraction too much right to our stop. And that's a great pity because now it's running quite nicely. But, I like to have stops in. When we have the stops in, you get taken out. But when everything starts to work, you more than make up from those stops. So I consider it a very important ingredient, especially in a market like this. So spend time with the Dow. Only thing to add is that in the weekly chart, it went very close at 36,661. The 200-period exponential moving average is at about 36,535. I say about because within one day it can change just a little bit because it's a rising 200-period moving average. The monthly chart, can't talk about that halfway through the month. Okay, now we're going to run the others, and you'll see this is going to be very interesting for the day because the S&P did get gap up. It opened at 54.41.96. It went all the way to 54.59.46. Now it's at 54.36.65, up 73, up 1.37%. The day is really young. It's the period between 10:20 this morning and now we're at 10:10 a.m. So 10:20 to about 11:10. when you're in Steve's show, that's where I want to see exactly where the market is. Has this traditional sell-off from a high like we saw right there on, was it Wednesday afternoon on the 9th? Are we looking at the same sort of thing that it gets sold off? But look, even though it got sold off, we had a Chapman red Roman candle, small one, on Thursday, and then we closed just above the high. That was important. And today we're again above the high. So it says to me that the selling was so intense that this is, even if it's an oversold bounce, we could see a pretty decent bounce maybe into Tuesday or Wednesday, and then that becomes the big test. So that's the 9-period moving average. Still a long way to go to get to cross positive. But look at the MACD, 0.54. It is minus 0.54. It is so close to crossing positive, and the relative strength is improving. Stochastic is not great. It's at 50%. It's improving. That on-balance volume has been worrying me for a little bit here, because in the S&P, look how squiggly it is. Look at the Dow on that the same thing, the on-balance volume, the blue line. And look at this. Also, it's kind of squiggly, right? Even though it hit the exact low and turned up. So that just says to me, maybe not ready for prime time, but we're going to treat it as a bounce. Let's go to the QQQ. QQQ is trading right now up 677 at 461.10, and it is up 6.63%. This is going to be the same sort of thing. It's struggling maybe a little bit more. Let's look at, the MACD has crossed positive, and the on-balance volume is just a little bit better. Stochastic's only at 52%. I really want it up at 68 to 72% at this particular time. And here you didn't even get to the 200-period moving average in the weekly chart. So there's a little bit more strength here. Let's go to the IWM. IWM is the Russell 2000. That is up $1.77 at 186.22. That's struggling quite a bit more. I do want to go to the SMHs. That's really important. The semiconductor index is up 270. It should really be up 570, but it's not. So that's a clue to say, this is, you can make changes in the tariffs. I'll talk about that in a moment, about tariffs, how it's affecting one of the areas. 204.19 up 2.88. That is already, they were the harbinger of the down move, and right now they're not the harbinger of the up move. They're really kind of struggling. I do want to go to gold. Gold is down 24 at 3220, 3,220. When it made an all-time high on Friday, and that was on the continuous contract, and that was at 3263. Today's high is 3261.6, so a fractional lower high. We'll see if this is going to be a turn down, because this is interesting. Look, so you've got gold, all-time high on Friday, just missed it today. Silver made another recovery high. It's at 3201, up 10 cents. Not as good a chart. A lot more work needs to be done, but this is what I wanted to show you. Look, the GDX. And this is the question. Is this a brand new leg A, or is this peak A going to a peak E in the GDX? I don't know. I'm still looking at strength, and we're still long gold, and I'm holding it. Haven't taken anything off just lately. We did recently at one of the highs. Moving from way lower down. I'm watching this very closely, because this is a place that countries are going to. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, Basil Chapman, we're back. Dow is now up 266, giving back some. S&P is up 57. So I had a question while I'm looking at the gold about HMY, Harmony Gold, South African gold miner. I have a target for 2025 based, let me go all the way back. Based on the high that was made, I'm scrolling across all the way back into 2000 and I think it was January 1879, 1884. So that was February. February of 2006, it did 1884. And right now it's trading at 1713. Isn't that amazing? Went down to the nines. Most recently, actually went down even further, went down to the fives. So Harmony HMY, as I'm looking at it, and I spent some time on this particular one the other day because it's a South African one. I'm originally from South Africa. And I said, okay, let's see. We've got this cup formation and we've got this huge move to the upside. It's trading right now. The high today is 1732. The high on Friday was just a tad higher at 1737. So as I said, I spent a little time on this. And my analysis was that was an instant restart back in mid-March. Went to peak D. Within one bar, it went to E. Then it pulled back. Never took out the low of D. So that means it went E/A. Remember, alternate count. When you get an instant restart. F/B. A G/C. And what is this big move to the upside right now? Is it a D? I think it is a D. And technically, at 84%, the stochastic's still very good. The on-balance volume is a little bit overbought. MACD is very good. Relative strength, look at this gray line, very good. And you say that the earnings are coming out very soon. It should have really good earnings, right? So it depends on what gold is doing when the earnings come out. Most importantly, this looks really good. There are a couple of gaps. There's 1, 2, 3 gaps. So is this a 3-gap play to the upside? Well, let's just go back and we'll have a look at gold. So gold has a leg to the upside. And the question was, I had to put in a down arrow because it went for 3 bars. It actually went for 4 bars underneath the 14-period moving average. We flipped to pink just momentarily. And then it gapped up and made a new recovery high. So that's the question. Is this an E, which says, I've got to be a little careful? Or is it an A, which says, are you kidding? Every single dip you must buy So I had no choice but to put that down arrow in. Now, every once in a while, you get a move like this, and it makes another recovery high, and then it turns down very sharply. I'm only putting this in as a demonstration. Then I have to put this inverted little pyramid right here, this little inverted V. And that's it. Yeah, that down arrow was a legitimate down arrow for all the technicals that I look at in the Chapman wave. But that spike to the upside might have just been kind of residual strength rather than brand new strength. So this is what I do. But instead of doing this inverted V-shaped pattern, which says, okay, now that's like a rogue wave to the upside that's going to fail, I do this. I put a question mark. I like my technique to be as clear as possible. There are times where you have no choice. It becomes a little fuzzy because you have to wait for the next bar or 2 bars before you get a clarification. In this particular case, I do have to wait, but I'm putting a question mark there, and it just says, I don't know. Everything so far is still very bullish, but there is a chance that was just a single leg up to the upside, like a single leg A failure pattern. So that's what I'm doing there. So harmony, well, let me tell you right now that the support, HMY, let's go back there. That's the best thing that I can do. Just say to you, this is what I'm looking at in terms of break out to the upside or break down to the downside, and just make it as simple as possible. If it starts to trade under 1560, and it's at 1711 right now, by Wednesday, that's going to be a single leg up A failure pattern. As I see it right now, there's still so much uncertainty that there's a really good chance that gold still continues to be the insurance policy for really big China, for really big countries, that is, that are buying gold because there's economic, geopolitical instability. That's just making it as simple as possible. It's one of the reasons why we're stuck with our particular long position in gold for quite some time. And maybe you'll take a little bit off. We've taken very little off, but that's the way it is there. So I'm just saying, I don't have any proof yet. And I've got this as a leg B for harmony. There's no other way I can count it in the weekly chart. So this is still very bullish. Let me just put it that way. And any pullback would say to me that you've got to consider it's a digestive phase after a spectacular move. But I don't see it breaking down just yet. Okay. Next question, CDE. So I had a question over the weekend. Usually, Basil, you get core mining. When you want to go to the silver stocks, what do you want to do now? So CDE, and I also have a question in the den about CDE. Earnings coming out. Okay, so CDE, I've watched it closely. I needed to see how it closes by Wednesday, because if Wednesday it's starting to, this is core mining, a silver, it has some gold, I believe, but it's really a silver stock, silver mining, and this is the trend line that I'm looking at. This is the Chapman wave falling axe, but I prefer just to put it here as the Chapman wave inside track repellent propellant line, and it's right there now. I'm going to make that red or pink. I'm making that green, and it's just real simple. If core mining starts to close, not just break out, it needs to close. So this is still a single leg A to, remember, that can't be an A because you have to make a trough before you start the count. So this is an A. So this is a leg A, and it's not a peak A, it's an A until the end of the day. At the end of the day, core mining hasn't gone above $6.10. If it goes to $6.10, then that's just a parallel leg E to the upside. It hasn't made a peak yet, or it's an extension. But if it goes to 6.09, that's the high today. So far, the high is 6.01. That's going to say, okay, be careful. That is an A, but it's still a gray A. The MACD did turn up. The 914 is really looking good, but it hasn't crossed positive yet. Stochastic's only at 48%, and the on-balance volume's quite weak. So CDE, if it starts to trade, I would actually, you could start, I don't know if that was the question, but you could actually start a position here at 597. I need to have a stop, and the stop, unfortunately, has to be a rather big percentage because it's up 5 cents right now at 597. but at some part of it, I would say I'd have at 587. I'd take a little bit off and give it maybe another at 577. I'd say that would be the stop. But right now it's holding quite nicely. Weekly chart, it keeps hitting the 200-period moving average and then bouncing off and keeps coming back. This is a leg D to the downside. This week could be a trough D. It's acting quite well. So I'm looking at it, I'm saying, okay, in the silver area, and silver right now was up earlier. Let's see if it's still up. Now it's up 0.07. Not great, but it is moving higher. So as I see it right now, CDE, if that was the question, where can I get in? I'd say you can start your position here. Don't get carried away. Just start your position, have a tight stop. But if it starts to trade in the 6.22 area, that's when you might want to consider adding some. All right? I hope that clears things up. And I'll be right back. Dow is up 372, S&P's up 71. Basil Chapman, Tiger Technicians Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. We're back, and we're looking at Bitcoin. Bitcoin is up 11.95 at 85,290. Right? And you remember the same technique I was using for CDE and some of the others? Here's your channel. We've inside track, repellent zone. It went right to the edge, to the cusp this morning at the high of 85,705. And what I was saying all of last week, and I'll say it again today, if you can see Bitcoin trading in the 87,000s, probably 87,500 is the level that I'd be looking for, I would say there's a chance that you've got yourself a turn from a sell mode to at least a buy signal. That's not a buy mode that says it doesn't have to go to D. A buy mode says you're probably going to go to D, but a buy signal just says the trend has changed in the very short term. Now we have to look for you have to look for the stochastic to get from 47% up into the 70 or 80% level. A lot of things have to happen to get to a buy mode, but it hasn't yet gotten to a buy signal yet. But it is a nice move up, and we're looking at just one red day from Wednesday, Thursday, Friday, Monday, from Wednesday. And we're making higher highs every single session so far. And that's the kind of action I like. But it's still early in the game. We still remain long from the fall of 2024, taking a little bit off, but not that much, because I still think it's in play. And I've spoken about that peak in the weekly chart at 110,975, that I suspect that we're going to be in a consolidation phase for a little while. Maybe even rather than weeks, but maybe even a couple of months. So here we are. We'll see what happens next in Bitcoin. Now I need to go to question came up. Where did it go? Oh, Berkshire Hathaway, BRK. But what's Berkshire Hathaway telling us? What it's telling us is this is a stock, Berkshire Hathaway B shares. It's called a financial. It's in the XLF. Now, of course, it has many components that are kind of in the whole financial area, but it has many others. So really calling it strictly a financial is not accurate, but I consider it, this is very much part of the economic vernacular. Why? Because Buffett is in everything. I mean, you just name it, insurance, furniture, it doesn't matter. He's got his foot in the door. Oxy, I think he still has his Oxy shares, Occidental Petroleum. So it is right now at 532. The all-time high was round number 539 on the 2nd of April. What? 2nd of April? And we're still in April. I can't believe on the 539, 2nd of April, and it goes down to 462.10. That's a 90-point move, almost 100. That's like about 17, 18%. That is, and where is it now? It's on its way back up. MACD hasn't crossed positive. Retro strength has improved. Stochastic's not bad at 72%, and on balance volume is actually working quite well. And the 9-period moving average today, the day is young, but so far today it's crossed positive. Isn't that interesting? So I'm watching this and I'm saying that, and the guy has billions and billions of cash at hand, one of his highest levels of cash. So either he's prescient, which he often is, in getting out of, building up a cash position, looking for things to buy in the next major pullback. We'll watch it closely. So the question is, where do I think it's going? Well, if it closes over 539, round number high of the 2nd of April, it needs to get, like gold. Look, you see this chart right here? You see it makes a high, pulls back sharply. 9-period moving average just flipped for a moment, for 2 sessions, pink, and then it went back to green. And it went much higher than the 3,201.6 high that was made early in April. So that just says that's not a V. Well, it's a V shape, but it's not a double top because it went much higher. It's like the dreaded H pattern. So let's go back to what we were looking at, which was Berkshire Hathaway, BRK.B, as a clue. That's all it is. Just one little clue. And that says if it goes to the 549, 552 area, and closes there, that changes the pattern. Right now, you have to consider that there is the potential for a double top. And in the weekly chart, I've got it as a peak G/B. And once it goes 1 penny higher than 539.00, it starts Nothing else. You can't count. There's no H in this pattern. It goes to a leg C, and that's very bullish in the weekly chart. So those are the parameters to look for. A close below, it's at 532. A close below, I would say 517 says, failure pattern. Next question came in. Oh, what is that? BULL? Is that a stock? No way. That's an IPO. Bull. And what is it called? A bull. It's called the Webull Corporation. Well, I'm not sure what's going on here. It was mentioned. All I know is that this is really bullish. Came out Friday with a low of a low of, what is that low? 954. Opens at 16, round number was open at round number 16. And gaps up today, and the high, the high is 55.14. So I am not quite sure where that fits. I have no idea what it is. Okay, so let me go back to this. In fact, in the break, I'll type in BULL and see what it is. Nice symbol they've got there. And they're living up to the symbol. Very interesting. All right, a couple of things we need to look at. Microsoft. Not bad. Started a leg B today, just barely, but it did make a leg B. It's up 4.72 at 393.17. I think it's becoming a much more interesting stock. Look, it broke the Chapman Wave inside track repellent zone. It's still there. It's going to be there until it really moves sharply above it. It's sitting on it right now, having gapped up. I think this is much more interesting. So I don't know how the tariffs and all that. Oh, tariffs. So let me go to SDZ. So Microsoft, we own it from low down 338. We're taking quite a bit off, but at the same time, I'm watching it. I would like to add back, but in this environment, I have to think it through very carefully and look at the technicals a lot better, a lot closer to see whether or not we want to add. So SDZ, this is so interesting, had a new recovery high this morning in leg D. It went to 189.78. This is Constellation Brands. It has liquor. It was one of the leading companies in the whole liquor thing. Then it bought some cannabis. It went into the cannabis area. Oh, I lost the notation. And right there I said, they had everything mastered in the liquor store. Now they have to learn the new thing. They might turn down very sharply, where they went from the 222 level, I would say, down to 104 in March of 2020, 5 years ago. Well, they've come back very strongly.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. We're talking about STZ, Constellation Brands, trading at 187.38, up $1.70. It goes with it's a round number, high, and then the 1 month, and then the very next month, that's the penultimate month, then the ultimate month, which is April of 2024, exactly a year ago. It goes to 247.75, a 4.75 higher than that round number high the previous month. And lo and behold, it drops a little bit down to 60.45 in February, and now it's rallying. So I'm speaking to someone who's in the business, who works for a family-run business, very big, and they were doing extremely well. It's owned for like 60-something years, family-owned. And out of the blue, you get the whole thing with the tariffs. Well, I said, well, what's going on? I said, this is very serious. He said, I said, why? Because I believe people are taking American products off the shelves, especially liquor. He said, yeah, this is not good. So I said, so how will you ameliorate it? What are you going to do? Let me just have a drink of water here. So he said, that's not the issue. He said, somehow we'll kind of get through that part of it. What really is the issue are the bottles. So what do you mean the bottles? He said, we import all our bottles, and a lot from Canada. That's the issue. They're going up in price like you just wouldn't believe. And I thought about it, and that's the whole thing. You never know when a serious change is made to anything. You never know what the repercussions are. You never know what the fallout is. You never know what is going to be impacted, how it's going to be impacted, and why. So that's very interesting to me. So PPG, I thought, wasn't PPG? Oh, I had it all notated once upon a time. Wasn't that in the glass industry? Maybe I'm wrong. But anyway, it was just fascinating to me. So I'm looking, so I thought, okay, so then yesterday I look at STZ, doing quite nicely. In fact, even up today, not the weekly chart, that's got a lot of work to do, but that daily chart, falling exclamation breaks out to the upside. I'm kind of impressed. And that's the whole thing, that you've got it. And that's what I was doing over the weekend, just going through a whole bunch of stocks, some that we've had, some that we don't have, some that I like our portfolio. In fact, I'm so upset that we just, to the tick, it's like someone was watching the stop that we had today for this particular issue that we got back in. And and it hit it just to the tick, and now it's very much nicely higher. I've got to have stops in, but it's so frustrating when they hit and then the price acts exactly the way you want. We had that in the Dow. You remember the Dow we bought at the low? I love trying my best to get the highs, exact highs or the exact lows. We got it right there the day of the low, and then we just got stopped out and it ran. We got the TQQQ just got stopped out. That's 3 times long, the QQQs. And then it ran much higher. It's very frustrating. But you know what? In the end, it works out that you're keeping your capital. That, to me, is the most important thing. So with that said, berating myself, I wasn't sure. I had 2 other things the way I would have done, but I think I still, with a different way of doing it, that's about the area that I didn't want to see it break. Anyway, that's the way it is. Now, let's do this. We haven't done the TLT. The TLT, I did the bonds for the update. Look, here's at 87.09, up 20 cents. That's that single leg A failure pattern. I could have called it A, B, and then it still would have gone to a C and failed. So at 94.09 in the daily chart, we did the cup formation, did the left side, right side. Everything was just great, except the notation says, an Eiffel Tower straight up, straight down failure pattern. Yep, that's what it did. So the TLT means that the TBT has been going higher, and it's gone to a peak A and then a peak B. Is this going to fail? But in the meantime, it's really important. I think it's important overall that the yields don't break out very much more. They're going higher, but they're not really. I mean, at 3.63 right now, if they go above the 3.898 high that was made back at the beginning of the year, that's going to be quite serious. I think that will start to affect. If you're look at this, Toll Brothers, it doesn't look great, right? It went to 169.52 in 2024, and here it makes a low in the 86s. It's trying to bounce right off the 200-period moving average in the weekly chart. That's just that's not great. All right, so I need to do that, and then I had some other things that I wrote down. I had questions. Walmart. So Walmart is having a really good rebound. It's at 94.23, up $1.44, gone back to the up channel that was support. It went under it, now it's over it. So Walmart is still a place that says, retail, box store, it's in the running. It's doing okay. It did drop sharply from the 105 high of the 14th of Feb down to 78.91. I'd say that's a pretty big pullback percentage-wise, but now it's coming back. It's a good Costco. Costco's also trying to come back. So for subscribers, I've been saying the defensive stock, not the defense like Raytheon, etc. This is an area that we've got to monitor because that's where money goes when things. But, you also have the fear of some kind of inflation with imports, etc. But have a look. Coca-Cola is doing very nicely. McDonald's had a big rally over the last 3-4 days, and today it gapped up and it's up 4 at 313.94. And that's just telling us that there's a certain normalcy now that you've got, and that means that money tends to flow into the defensive area, like the grocer. Let's see what GIS is doing. There we are. That's important. GIS is General Mills. Right up there it is, General Mills. Yeah, that's not doing so well. So it's very specific to some of the areas in the defensive stock range. So corn is one that we were looking at the other day. CORN is the ETF for corn. It's a 2 Korean corn fund. Nice up today, up 9 cents at 1966 from the low in the low 18s. Just a week and a half ago. This is a nice percentage move. It's really important that these things move. So TFPM, we were discussing it last week. It was introduced to me by one of our dentists, and there it is. A lot of these things have had the sudden spike over the last week to break out, and it's like a brand new A. But I've got it notated as an F/A. I'll keep it like that for the moment. This is triple flag precious metals. MP was another one that was spoken of in the DAN. Wow. Look at that. Up 21% just today alone. Up 4.85 at 27.53. MP Metals Corporation. Very nice. Good eye. We've got a dinner who identified this. Actually, a few, but one in particular. And very good action. MP is the symbol of 27, 61 of 59. Basil Chapman, nice rally in the Dow. I say between 10.20 and 11.10. Let's see what happens. Yep, very good.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, just in this final segment, let me just go through what I'm looking at. I considered that when the histogram of the MACD starts to shrink, meaning the distance between the faster moving average and the slow moving average is being shrunk, it's starting to decrease, that means that there's a chance that it could flip to positive. Remember, it was -7 a little earlier on, and now the 0% line is -2. I'm suspecting that there's going to be an attempt to get to, it's at 40,773 right now. So the high that was made, it's above it. Is that correct? It started a leg B. Oh, I hope it does. 776. All right, it's very close to starting a leg B in the daily chart. Still a gray leg B because I do not have any technicals giving it even a buy signal. But if at any point this week, I don't care what the reason is, but if it can get to the 41,200, close to the 41,819 200 period exponential moving average, that is going to be really a big positive on the short term as a very oversold rally is unfolding. And as I say, we're long from Friday morning early, and kind of aggressively long. Now, here's the S&P. So any pullback says 40,000 is at 40,727. I'd say 40,000. It closed below 40,400 in the next 2 days. Says, failure. Not a failure so much as a failure to confirm the rally, but it means sideways action. S&P at this particular point, SPX, let's go there. All right. Hasn't made that leg B. It's quite a bit under it, but we'll see if it can do that. But most importantly, the MACD actually has crossed positive. That's ahead of the Dow. 9 is still very much weaker, so the support is at 53.62. Let's go to the QQ. Q quickly, Q for quickly at 462.50. It really needs to break that level. It has to go to 469 to 472 over the next 3 days. That's going to be important. Most importantly, I would say, is that 450 is going to be the support. Have a great day. Stay tuned for Steve Rhodes and all the great programming.